Good morning all, CamelbackTrading.org coming to you this Thursday morning, December 9th, and we are looking at Window Trader's market profile of SPY, IWM, and triple Qs. And after the market was basically consolidated yesterday, even though we all took out the previous day's highs, SPY and ES took out both sides of the IB. Took a while for triple Qs and NQ to take out their initial balance. They ended up both going out with price probes, only right now firmly being rejected. As you can see, we're trading below our afternoon pullback, which was our 8 wide yesterday. Light volume so far this morning. Right now, the overnight high is 469.87. The overnight low is 467.50. Now, buyers would certainly like to defend yesterday's low to keep the daily still up, one time framing up. I don't think it would be a disaster if we took out yesterday's low. Monthly's in balance, weekly's in balance. No harm putting the daily into balance and getting a little more consolidation over the next couple of days before they continue their move higher, possibly to a new all-time high before the Fed. What you wouldn't want to see, well, first off, we talked about last Friday's low. You see that and game over. But what you really wouldn't want to see, if we ever do get into this gap this month, it's not going to be easy to fill the first time. Now, obviously, if it comes out next week with the Fed and they say something that the market doesn't like, it can get filled in a heartbeat. But just, it shouldn't get filled the first time on a normal basis. You would like to hold that gap if you were buyers, and then resume that upward move to make new all-time highs. As far as the game plan for this morning, right now, 75 minutes to go, you're smack in the middle of balance, smack in the middle of value. Really not a play here. I mean, if you open above J's low, can you take a long against it since it's the afternoon pullback? I guess you can, but there's not a lot to lean on. So if you get below it by a couple of ticks, I would be out. I would expect some pretty good chop inside of yesterday's range if that's the case. Now, where there were buyers yesterday at A's high and especially L's high, if you get up there, you can take a put play the first time. You can take a put play against A, maybe add a little bit against L's high. Any acceptance above L's high, you will take out yesterday's high. So that's a put play the first time. Value would be overlapping a higher by that point, but at least you know you're out. In the next 75 minutes, if for some reason this market rallies and we open above L's high, well, then you could take a call play and use A's high as you're out. Other than that, again, I'm not sure I would take a call play or a short play right in this level. Maybe if you were to pull down the first time against yesterday's low, you could take a long to see if they defend the one-time framing up. And then on the chart, just going to show you the daily, right? Monthly's balance, weekly balance. Daily's up right now. If we take out yesterday's low, we'll be in a 3-day balance. Now, I don't have a problem with that. What I don't want to see is any real acceptance below the 20, see this gap fill at some point, and we languish between the 20 and the 50. Then you can have an issue. So, again, I think if we're going to get all-time highs, you'd like to hold this. I don't think you really want to get sucked back into this balance. Remains to be seen. 72 million yesterday. The volume, just on average. Remember, I've been telling the room, we've had huge volatility. At some point, that volatility will contract, as will the volume, as it did yesterday. And I think we're going to see that between now and next Wednesday when the Fed speaks. I think our ranges will be smaller and our volume will dry up a bit. Good luck trading today. Have a great day. And we'll recap at 4 p.m.